Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. As the summer doldrums drag on, precious metals bulls are eyeing potential support levels for a seasonal bottom. The gold market found support at the $1,750 level last month and has since been trading with a slight upside bias, although the price action hasn't been especially exciting. Base building in these summer months can be a healthy technical process in the context of a larger bull market. Gold prices currently come in at $1,808 an ounce, down 0.6% for the week. Turning to silver, the poor man's gold has been underperforming this month, but did catch some buying interest midweek just under the $25 level. As of this Friday recording, silver trades at $25.21 an ounce to register a weekly decline of 2.1%. Platinum is off 3.6% since last Friday's close to trade at $1,076. And finally, the palladium market is putting together a 3.2% rally this week to check in at $2,747 per ounce. Meanwhile, investors are weighing troubling developments on the inflation front. Price increases are hitting consumers every time they shop, and they tend to show no signs of letting up. Appliance makers, including Whirlpool, are announcing price increases of as much as 12% as a result of higher labor and material costs. Unilever, which owns some of the leading brands on grocery store shelves, warned Thursday that rising costs were eating into profitability. Everything from ingredients to packaging to transportation is becoming more expensive, and that, of course, will ultimately have to be passed on to consumers. They can expect to pay more for Cheerios and Tide laundry detergent. Packaged goods giants General Mills and Procter & Gamble's recently implemented price increases. Some of those increases may be disguised by reductions in unit sizes on certain products, a phenomenon that has been dubbed shrinkflation. But savvy shoppers won't be fooled. They know that price isn't the same thing as value. What matters is the cost per ounce of a box of cereal or bottle of detergent. The best value in terms of cost per ounce is usually found in larger size products. That is also true to a significant extent when it comes to bullion products. Fractional size coins of less than 1 ounce tend to cost more than full ounce or larger coins when calculating the cost per ounce. Large bullion bars often provide the best value in terms of metal content. But there are exceptions to be aware of. Sometimes premiums on pre-1965 silver coins or scratched and dented gold coins are among the lowest available. And sometimes buyers find utility in fractional-sized items or aesthetic value in coins that arrive in mint condition. Bargain hunters at the grocery store will often opt for generic or store-branded products. In many cases, they have exactly the same ingredients as pricier counterparts next to them on the shelf that are put out by more recognized name brands. This principle also applies in bullion shopping. A popular name brand such as the U.S. Mint's American Eagle will carry a sizable premium over a round issued by a private mint that is less well known. A Walking Liberty silver round produced by Money Metals Exchange has the exact same .999 purity as a Silver Eagle. If they were both melted down, they would look exactly the same, have exactly the same physical properties, and be worth exactly the same amount. But silver stackers who opt for the Walking Liberty will save a few bucks per ounce compared to the American Eagle, which is manufactured by the poorly run U.S. Mint. At some point, upward price pressures will again exert themselves on precious metals markets. When they move, they can be expected to move much more dramatically than cereal and soap. Consumers who are looking to protect themselves from rising shopping bills would be wise to consider buying bullion products while they still can be had at bargain prices. The underlying drivers of rising inflation aren't going to abate anytime soon, despite the insistence of Federal Reserve officials and President Joe Biden that the inflation problem is just transitory. The White House Budget Office had forecast inflation of 2.1% for 2021 in its recent budget proposal. Inflation is running at more than double that rate. It's running at 5.4% according to the latest Consumer Price Index reading, and still higher according to other measures that may be more accurate. The Wall Street Journal recently reported that M2 money supply has been growing at an annualized rate of 23.9% since March 2020. It typically takes several months for a flood of new currency to work its way through the financial system and producer supply chains before finally showing up in retail prices. So the monetary inflation currently being pumped out will have consequences well into next year. Where the next inflation hotspots will emerge is difficult to predict, but it's a pretty safe bet that gold and silver markets won't be exempt from the price consequences of inflation that is already here, as well as the inflation that is yet to come. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.